Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. It's bank week. We're talking a lot about earnings season, which is kicking off. We did a big macro video. We're talking about JPMorgan in this video. We're also going to touch on Wells Fargo and Citi with others. So make sure you hit subscribe, whether you're listening on iTunes or if you're watching our video on YouTube, hit subscribe. You can check all that good stuff out. If you're in Seeking Alpha, hit subscribe. That way you can get all our video and written commentary in real time sent to you via email. I'm Andrew Hall. Joining me for this discussion on JPMorgan is Ben Nye. Ben, how are you?
I'm doing well. Excited
Good.
for it.
Yeah, we're excited to jump in. It's earnings season. Seems like we kind of just did this, especially since we just did our macro preview, so we really just did this. But we're excited to jump right in, and let's start off with JPMorgan. Talking a little bit about this. As a recap, check out our macro video, but we talked a lot about interest rates, increasing, kind of the general economic strength and some inflation that we're starting to see in a number of ways, and even touched on things, like proposed corporate tax breaks and regulation rollbacks. So check that out. But let's just jump in real quick and right off the top with JPMorgan. What are the themes you're kind of keeping an eye on as we're looking at earnings coming up on April 13th?
Well, whenever JPMorgan reports, it's kind of the Jamie Dimon show. Yeah. I think he comes out with his press release and all of his supplemental material, and it's really his company, more so than really any bank, which is pretty impressive when you consider it's a huge financial institution.
And it's almost like a tech company. You know how sometimes they just adapt to this identity, or maybe you see something like Tesla or even Apple when you had Steve Jobs, kind of this iconic figurehead.
Yeah,
it's really what you get with JPMorgan, which is just staggering given like the size of it, the longevity of that company to be really characterized as one dude. I mean, it's pretty crazy.
A great way of kind of speaking to this is that after the whole London whale incident, I ended up going into a Chase branch, and I was talking to one of the representatives, and she was telling me, did you see Jamie Dimon's? I'm so proud of our CEO. I mean, what other bank employee, just random employee, would be identify so closely with the CEO? Yeah. Especially because he's not a tremendously identifiable person. I mean, he's a multi-millionaire. He may even be a billionaire.
Right.
And yet people just have this identifiable connection with him, which is interesting to me.
Yeah, and that's really kind of what we're going to keep an eye on with JPMorgan. One of the things we're looking at is we expect the financial stocks sometimes to kind of lead a bull market, so to speak. But with them, they've really kind of carved out a niche as kind of the flagship of banks, and kind of this reputation of operational excellence. When you start to look at that and you start to look at where they are and where we are in kind of the economic cycle, some numbers to throw out, kind of the general earnings expectation, the consensus numbers about $1.51. There's kind of this whisper number where people are saying, closer to $1.59, maybe going up a little bit higher. Do you expect a good quarter, or are you more focused on things like guidance and kind of the softer points of where they're expecting to go?
I think they're going to have a good quarter. That's definitely my opinion.
Opinion.
But I think that you've just seen a lot of factors line up. I think the economic data's lined up pretty well. I think that, trading is always a bit of a wild card, but it seems like they've dialed that in pretty well. Last time, one of the big aspects was these reserve releases that they had. Because what happened was when oil and gas was really, doing very poorly, and there was a question a lot about the credit worthiness of a lot of these and the solvency of a lot of these energy companies, you saw JPMorgan take some more reserves. So you saw reserve releases in the fourth quarter, and I think you could start to see those continue in the first quarter because oil and gas has stayed relatively constant. But a lot of people say that those are lower quality EPS numbers, which I agree with. Nevertheless, I think that should help the reported EPS number and just give a more bullish sense to the stock. And if these companies can come out and reaffirm their optimism about the economy, which I expect Dimon to do because he's been pretty tied in, and in his public comments, he's been vocal about being optimistic under the new administration. So I expect to see that optimism reflected in their view of the economy and their results. So I'm fairly optimistic about the quarter.
Yeah, and it's kind of a unique oddity, and we're going to talk about this really with all three stocks that we're looking at this week, not just JPMorgan, also Wells Fargo and Citigroup. But, we've had this market that's really run up quite a bit, but JPMorgan's basically flat.
Yeah.
It hit an all-time high earlier this year, back in March, so it's certainly, at a lofty level to begin with, and you look at what the stock's done over the last couple of years. Would you expect it just to run away? Probably not. Yeah. But at the same time, when you're talking about a market that's up 5 to 6%, an economy that we believe is getting stronger, you start talking about rate hikes, in which we expect multiple during the course of the year, and I think a lot of people do. You would expect that this stock would be up more at this juncture in the year, sitting here, middle of April. So I think that's going to be one of the things to kind of keep an eye on. Is it doesn't take a whole lot to kind of get a catalyst, in this earnings, especially from a figurehead like Jamie Dimon. And what's interesting, I think, too, is just kind of the read-through with other financial stocks. That sector as a whole, I think you were saying before we started these videos, it's, one of the third lowest. It's the third lowest.
It's beating telecom and energy.
Yeah. So not exactly hitting the cover off the ball, so to speak. So what's interesting, too, is I think they are actually in a position to kind of prop up the whole sector in some regards. A strong quarter for JPMorgan, right or wrong, probably is going to, rise the boats, so to speak.
Yeah, so then you say, well, what's the catalyst going to be? I think the earnings is an important catalyst, but how does that really change the mind of investors to say, wait, these financials are not even a value story, but also a growth story, and I can get it for a cheap price? Because so often you move on financials throughout the cycle. You move from price to tangible book to price to book, then to price to earnings. And I think we've largely past the price to tangible book value phase. I think you could argue Citigroup is still priced on that. Yeah. We're moving from the price to book phase, and we're kind of going to the price to earnings phase. And but what's the catalyst to take them there? And I think that's really demonstrating that this is actually stock that can actually grow shareholder value, either through just increasing in the book value on a year-over-year basis, or increasing the dividend. The issue becomes for the dividend is they don't really have control over it, because this is regulated. So what has happened is over the last few years is that banks have weighted their capital returns more to share repurchases than dividends, because they want that flexibility. They don't want to lock themselves into a large dividend and then be told by the feds that they can't do that. So if we do, so this is where it kind of ties into a bit of the regulation. If we do see a little bit of reduction on the regulation side and increase on the dividend side, increase in optimism, then that I think would help to really demonstrate the value of some of these banks. Unfortunately, I don't think we're going to get that this quarter, because we have to wait for the CCAR results, which are probably reported they're probably coming in the next 2 or 3 weeks.
Right. So definitely something to keep an eye on. Also, the macro theme we touched on was really that regulation aspect, just to see what could change there. Again, it's hard to anticipate some wide-spanning, quick, repeal of some of these regulations. And I think that would be misguided to expect that. But I do think sometimes you can get commentary from a guy like Jamie Dimon, who, as you said earlier, kind of has his ear to the ground on kind of what the expectation, if there is an expectation, on any of those things. Ben, any closing remarks on JPMorgan?
I'm excited to see what they say in the conference call. I think they're always pretty entertaining.
Yeah.
And especially the macro commentary. I think JPMorgan will probably give you more macro commentary than you get from the other banks, which will probably have more idiosyncratic elements. So if you only can listen to one conference call, I'd make it JPMorgan's.
Yeah, that's a great tip. Real quick, we are long JPMorgan, so we do own JPM. This is the Investing Podcast. Make sure to hit subscribe. Check out our other videos. We did a macro financial sector preview, so to speak, mainly hitting on banks. We also have a video on Wells Fargo and Citi coming up this week. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.